Stocks have had a strong run this year, but my next guest says the big gains in the coming years will come from parts of the market that you might not be invested in. Joining me now is Cambria Investment Management co-founder and Chief Investment Officer Meb Faber. Meb, thanks for coming on the show, joining us from sunny Los Angeles, California.
Happy holidays. Great to be here.
So this is the time of year for predictions, and it is only fair for me to acknowledge that predictions about the direction of the stock market have a spotty track record at best. But one of the few reliable indicators of future performance is starting valuation. When stocks are cheap, the following decade tends to be pretty good, and vice versa. By that measure, how do we stand heading into 2024?
You know, as you huddle around with your family in this New Year's, you should clink a glass of champagne and celebrate not just this great year in markets, nor 2022, but it's been an absolute monster run for U.S. stocks all the way back to the global financial crisis. And if you look at stocks over this period, we like to look at 10-year trailing returns. This is one of 4 periods in history where stocks have consistently compounded at over 14, 15% per year for a decade. And the other 3 had names. It was the Roaring 20s, the Nifty 50s, the internet bubble, which was my favorite, and whatever we want to call this recent period, COVID, meme stonk era. But also take a step back as you cheers your family and say, this isn't necessarily normal. The good times don't always last. And after the good times, as we all know, comes the hangover. We had the Great Depression, we had the inflationary 70s, the internet bubble burst, and then, of course, the financial crisis, too. What comes next? It doesn't have to be something bad, but on average, broad market cap weighted U.S. stocks are expensive. They're not as bad as they were a couple years ago, but we would expect muted returns for the broad market. That's the bad news. The good news is there's plenty of great places to invest other than market cap S&P 500.
Okay, for starters, I think, Meb, we should go on Twitter and ask people to name the past 15 years. You know, let's get something fun in there, like Roaring 20s and Nifty 50. I'm not quite old enough to have remembered those times very well, but like you, the dot-com bubble, I was around. And the interesting thing about that period was there were a lot of stocks that did quite well, even while the NASDAQ was getting thrashed. So in the coming years, what do you see as the opportunities that might do well?
Yeah, so very similar to the late 90s, early 2000s. After the bubble period, 2000, 2003, small cap value outperformed the broad market by 150 percentage points. And that feels a little familiar because until recently, small caps have massively underperformed large cap. And on average, value has not done great this entire cycle. Now, we do think that changed in 2021, 2022. 2021 was actually worse than 1999 for value stocks, which is crazy, cheap versus expensive. So this has set the stage for a massive opportunity. We like to focus on shareholder yield, which is companies that are paying out cash dividends as well as buying back their stock, that are trading cheap. They're not doing it with a bunch of debt, so they're high quality stocks. These stocks can be found for single-digit PE ratios, and on average, they have a double-digit shareholder yield. So that's looking at cash dividends plus the buybacks. In the U.S., that's majority buybacks. Now that we have a fund that does this, SYLD, the 3 biggest sectors are energy, materials, industrials. But this portfolio, we think, is in a much better position, these high cash flow stocks for the next, not just year, but 3, 5, 10 years too.
So that's domestic. In the past 15-year period you're talking about, despite the mantra of, you know, it's important to diversify internationally, it hasn't been a great place. The U.S. has been the place to be. Do you see a catalyst that's going to change that? I mean, still, growth is better in the U.S. than in developed world. Inflation is actually lower, believe it or not, than in much of the developed world. What's the catalyst that would mean investors overseas are finally going to see some decent returns?
There's a couple, and they're always a little more obvious in retrospect. But if we talk about nobody caring about small cap, certainly no one cares about foreign investing, and really no one cares about emerging market investing. They've done horribly compared to the U.S. since 2009, but on average, historically, it's a coin flip. It's usually 50-50, which does better in any given year. Now, the same statements I made about U.S. small cap shareholder yield apply to foreign and emerging. So in our FYLD and EYLD funds, they also have single-digit PE ratios, double-digit shareholder yield. What's more interesting, though, is a lot more that comes from dividend yield there, right? They don't have as much a culture of buybacks, although that's changing in places like Japan. We're seeing a ton of countries do buybacks over there. There's a slight sector composition different. Everyone says, oh, in the US, it's driven by tech and the Mag 7. Well, if you look at the emerging markets, that's actually our #1 sector, which people say, well, that's strange for a value fund. But that's because a lot of the emerging markets have been beaten up so bad over the past 10, 15 years. You can find a lot of similar companies and stocks, but at massive valuation discounts over the whole market. So going back to your point about what's the catalyst, it could just be valuation, but also the US dollar. US dollar is overvalued against most of the currencies around the world. It's a good time to get your travel in, Americans. If you want to go to Japan, the yen is at some of the lowest levels it's been in a really long time. But we expect that to be a headwind for the US dollar versus a tailwind over this past cycle.
Well, emerging markets investors have been suffering for a long time. Maybe 2024 will be their year. Thank you so much, Meb Faber. Have a happy new year yourself.
As well to you.